Hello everyone, welcome to Trade Breakdown on Gold. In this video, I'll be breaking down a trade I took on gold yesterday, right? Now, I don't usually trade anything apart from Euro Dollar and NQ, but I received too many requests asking me to do a breakdown on gold, so here I am. Although I only trade Euro, but I do watch and analyze the higher time frame of other pairs like Bitcoin and gold too. I don't trade them, but I do watch them for long-term plays if they offer any, right? Alright, let's get into the breakdown. So we know that as intraday traders, our main time frames are the 4 hour, the 1 hour, and the 15-minute, right? But that's not going to be the only time frames we are going to use. We would still use the higher time frames such as the weekly and the daily for our higher time frame analysis. Now we're going to use the daily and the weekly time frame for three objectives or purposes, right? And these three objectives are, first of all, to determine our higher time frame drawn liquidity, right? To determine a higher time frame buys for our trading, and then last but not least, we would be using them to generate a narrative for us, and then that narrative is going to help us generating a trade idea in the lower time frame towards the drawn liquidity we've determined on the higher time frame, right? That is going to be our objective on these time frames. Now this narrative that we're going to determine is going to be conceptual and contextual, right? And what I mean by that is that we're going to use these concepts such as market profiles, key levels, dealing ranges, EBITDA data ranges, and so on, which are objective, mechanical, and logical concepts, right? We're going to use these together in a logical framework and in conceptual manner to determine a narrative. That's what we're going to do on these time frames, right? Now, here on the weekly time frame, we can see that we're clearly in a bullish trend, right? Now, I haven't concluded that based on patterns or based on what I've seen. I haven't said that just because I can see the price is going up, right? Now, obviously, that's a factor. But the main reason behind why I concluded that price is in a bullish structure is based on the fact that price is rejecting lows, right here you can see, and breaking above highs, which indicates a bullish structure, and you can see it on the charts, right? Now, we've got all this price action right here, but we don't have to deal with any of that. Our goal here is just to determine what is price going to do this particular week and how is this weekly range going to play out, right? And in which direction it's going to play out. That's our key objectives on these time frames, right? If I had to explain to a 5-year-old of what we're going to do on these time frame is just to determine and just to anticipate what is the weekly range going to do this particular week, right? That's our main objective, right? So let's zoom in and analyze this price action right here. Now, right here, you could have expected anything in the past, right? You could have been wrong, you could have been right. That's not the point. Forget about what were you expecting right here and just focus on what price is telling you at the moment, right? That's your objective. Now, right here, we can see that first of all, we've got this order block. We've got this key level in the form of an order block for us, right? Now, the reason this is a valid key level is first of all, it has taken out liquidity. And second of all, it has filled liquidity in the form of filling this FEG right here, this FEG. So based on these two factors, I'm going to consider this candle, this particular candle, as a valid key level, and we're going to call that an order block, right? Now, the reason I've called this a valid order block or a valid key level is not because it's the last down close candle before the move higher or whatever the fuck you've been taught, right? That's not the case. The reason why I consider it a key level is because of two logical factors, which are that it took out liquidity and it filled liquidity. Now, recall back what I told you in the last chapters. The only reason any price action, like any form of price action, is considered a key level is because it does either of these things, either of these three things. It generates liquidity, it fills liquidity, or it takes out or purges liquidity. If a certain price action does either of these things, it is going to be called a key level, and price is going to use that particular price action for future reference to react off of, right? Now, forget about the fucking color or the last down close candle or the up close or whatever those things are, right? Those are based on patterns, and they're not going to work for you. And the reason they aren't working for you is because, first of all, they are not objective, which means you cannot turn it into a trading model which is going to offer you a consistent result over the long term, right? That's the problem with things that are subjective and not objective. That's why I'm teaching you the things that could be consistently used in a logical manner, right? And that could offer you consistent result, right? Now let's get in the breakdown and see what we've got here. Okay, so right here, this is our key level, right? Price closed above it, and now it's going to be used as a support and a future reference for price to react off of, right? So you can see we tested it once here, and then we got back down and tested it again, and also tested this rejection block right here, which is the wick of this order block, and price reacted off of there, and then it went higher, and last week it closed right here. Now forget about how you could have expected, right? That's not the point. You have to just look at what price has done in the past and how it has reacted to certain level, and what is it implying to do in the future, and where it could potentially head towards in the near future, right? And based on these factors, we can clearly see right here that price reacted off of this order block, and now it has closed here just below this high right here. So now you tell me, what's the next thing price is gonna do? Or what's the next thing, or the next draw where price could potentially go to, right? It's pretty obvious, isn't it? Price closed just below this high, and it reacted to this order block, and the structure is bullish. You can see that we build a contextual and conceptual narrative. Now you tell me which is going to be our drawn liquidity, our buys, and our narrative, right? Of course it's going to be bullish, and the drawn liquidity is higher, which is this high right here. And we determine that based on the past price action, using concepts such as key levels, market profiles, and all of these other concepts, right? So you can see that based on price action right here, this price action right here, based on what had happened in the past, and based on what price had done in the past, it's telling us one thing, that this price is gonna go higher towards that high right here. That's how you determine your drawn liquidity and your buys. It's as simple as that. But you need to remember it has to be logical, and it has to be conceptual and contextual, right? That has to be the key aspect of it. Also, at the same time, this is not it, right? We still have yet to discuss other things and other concepts too that are going to assist us in our higher time frame analysis, right? Don't think that you've cracked it because you learned this, right? You still have a lot to uncover, right? Now going down to the daily time frame, we can see that last week candle closed just below this high, and on Friday we had this candle right here which tested this high right here and filled liquidity. So now we don't have any unfilled liquidity below us, right? We have liquidity, we only have liquidity above in the form of this high right here, which implies that price is going to be drawn higher, right? So now our job on the higher time frame has been accomplished. We had three jobs there, we had three objectives. First of all, to build a narrative, and we did that, to determine a drawn liquidity, and to determine a bias, and we've done that now. Now we're going to go down to the 4-hour time frame and find a CRT at a key time, and then position ourselves and that particular CRT towards that drawn liquidity we have determined on the higher time frame, right? That's going to be our job on the lower time frames. Now on the 4-hour, first of all, I'm going to put the opening and closing times right here, so we can see where we are in the weekly range, right? And we're going to use that to assist us in our analysis. Now I'll be making a separate chapter on opening times in level 2 to explain what they are used for and how are they used, but let's discuss this first. So we know that the draw is higher, right? So now our job is to buy below the daily and the weekly open and ride it higher. If the drawn liquidity is higher, your job would be to buy below the opening, right? The opening time, buy below the open of the candle and ride it higher. Now let's analyze this price action right here. So first of all, you can see that on Friday, price came down lower, took out liquidity, and filled liquidity with this particular candle right here. So this candle has done two things. It has taken out liquidity in the form of this CRT low, and it has filled liquidity in the form of testing this FVG and this breaker block right here, right? So now when price closes above this particular candle, it's going to become a key level for us. And you can see it right here, it closed above it and became a key level, which is going to be used for a reaction higher. Now you can see that with this weekly candle is open, we straight away tested this key level right here in the form of an order block, right? But we tested that at a wrong time, right? Not a wrong time, but basically it wasn't tested at a key time, right? I was the more favorable time for us would be to a price had tested it such a time such as the London open kill zone or the New York open kill zone, right? That's what our anticipation and expectation is going to be. So but that's not happen, that didn't happen, right? Price tested it at a wrong time, right? Which wasn't those time which we were looking for, right? So what we're going to do in this case right here is stay out of this move right here and not take part, because it has already tested this key level at a different time which is not favorable for our trading system. So we're going to stay away unless price takes out liquidity again in the form of this CRT and tests the mean threshold of this order block, which is a refined key level in itself, right? This mean threshold in itself is an important key level which hasn't yet been tested, and price could test it and react off of it, right? Now your expectation here would be to expect higher prices, right? Because price has already tested a key level, and as I said before, you missed the move and now you're gonna stay out and stay risk off. But if in some case price tests this mean threshold and takes out this CRT, right, which wasn't tested before, right, then you can trade it and expect higher prices again, right? Now what I'm trying to tell you here is that do not force a trade idea right here. Let me explain it to you, right? If you are right here and price hadn't done this price action right here, then you would be expecting higher prices straight away, because prices tested a key level and now it's going to go higher, even though the mean threshold isn't tested yet, right? Even though that's a scenario for us, but you're not going to force that, right? You're not going to force that particular idea at that point, because price at that moment is telling you that it has tested this key level, and you'd be staying out because price tested it at an unfavorable time. So you would have stayed out, right? But then price does this right here and went down to the test the mean threshold and takes out liquidity at a key time. Then in that case you can start looking for trades, because now price has tested a different key level, which is this mean threshold of this order block, and it has done this at a key time, right? So now based on what price is telling you, you can take a trade right here. So you can see we didn't force anything right here. We just waited and waited to see what price is telling us, and then we took trades based on that, and we did not force anything. We did not force any idea whatsoever. We just took a trade and generated a trade idea based on what price told us and what price done, right? Now another scenario could have been that price could have straight away went higher without giving us an entry, which would have been completely fine for us, because we're gonna miss trades, we will lose trades. They're inevitable. You just have to see what price is telling you and not force anything, right? I hope you've understand what I've told you here. You should rewatch it a few times back to actually get what I'm trying to tell you, right? You're not gonna get it on the first time, right? So let's recall back. Right here we tested this main threshold and we took out this CRT low, and this 4-hour CRT was purged, and now we can start looking for trade ideas, and we can start looking for our lower time frame entry on the 15-minute. But before we do that, we're going to go down to the 1-hour time frame, which is our intermediate time frame, and we will refine this trade idea even more, and we're going to see what price is telling us on that particular time frame. So right here you can see that inside that 4-hour CRT we've got this another 1-hour micro CRT right here just above this key level, right? This 1-hour CRT was formed just above this key level in the form of an order block, right? So you can see we've refined the macro larger 4-hour CRT down to a 1-hour CRT, right? And now we're going to use this refined CRT to find a trade idea. Now there is a whole logical framework of how you're going to do this, right? and how you can refine key levels in CRT and the higher time frame down to the lower time frame, and I'll explain it to you in a different chapter. But just know that it's gonna take some time, right? And that's how it's supposed to be, and that's how it's meant to be. I could explain all of this in just a single video to you, but that's not gonna serve the purpose well, right? I want to make sure you get enough time to digest all of this and actually get the knowledge I'm supposed to teach you and give you. So be patient with me and don't try to rush anything, right? So right here you can see that this 1 hour CRT, it was purged at a key time, which is the 3 a.m. macro. It's a really good time for CRT purges, and this CRT was purged at that time and also tested this refined 1 hour order block, right? And now we're going to look for an entry on the 15 minute. Now you might be saying that this is a 1 hour CRT, but remember, it's just a refined CRT. The actual CRT is on a 4 hour, and based on time frame alignment, we're going to use the 15 minute for entries for a 4 hour CRT, right? So let's get into the 15 minute time frame. Right here you can see that it was purged at a key time, and this candle was that particular candle that took out that CRT, right? And now we're gonna wait for this particular candle to be engulfed, and we're gonna take our model 1 entry right here. Our stop loss is gonna be below this low, and we're gonna target the opposing 50% of the range and eventually the opposing end of the range, right? That was the trade breakdown on gold. We have discussed our higher time frame thought process, what was our thought process on the weekly time frame and the daily time frame, and then we refined them down to the 4 hour, the 1 hour, and then eventually we took our entry on the 15 minute time frame. That's how you're going to do your analysis and generate trade ideas.